on Business Incorporated today. Egypt raises rate. South Africa gets debt guarantees from rich nations. And we look at efforts towards food security in the aftermath of the war going on in Ukraine. It's the final one for the week. Good afternoon. Welcome to Business Incorporated. I'm Imi John Mekwa. We'll start as usual with markets here in Africa. We see that it was mixed at intraday. Nigeria's NGX was in the red. Its index was trading 0.29% after the much celebrated bounce back of the market yesterday. And that's now below 53,000 points. While South Africa's index was also in the negative territory, it was down 0.16%. Egypt's equities market closed on first day in the positive 0.79%. Also, Nairobi Stock Exchange ended Thursday's trading in the green session. We move over to the Middle East now, where it was mostly positive as intraday. Abu Dhabi rose by almost 1%. Also did Dubai 0.09%, and still within the region, Saudi Arabia and Qatari exchanges closed in the red on Thursday. Both indexes were down 2% each. Let's move to Europe now and see what's happening there. Germany is set to dramatically slash the cost of public transport across the country this summer. That's in a bid to offset rising prices, which is no news anymore. Every country is feeling it now. But there are questions. Will the country's buses, trains, and commuter be overwhelmed? That is the question, or one of the questions that Stephen Bursley, joining us now from Berlin, attempts to analyze. Hello, Stephen. Good afternoon. So how is this supposed to work? What's the plan exactly?
Well, this would be a €9 monthly ticket, and it would be good for the summer months of June, July, and August. And what it would do is allow those who hold it to travel on buses, on commuter rail, and local transports as much as they want during that time span, but also on regional rail, which goes out much further than their local area. And so in theory, that means for €9 a month, you might be able to travel on regional trains from one end of Germany to another. Now, this does not include the high-speed trains that most people do take to go from one long distance to another. We should mention here that the price difference is pretty considerable. When you look at here in Berlin, at least, such a monthly ticket would cost you €90, close to €90. So the price of €9, that's about $10 is a considerable cut. And the goal here is, of course, is to offer travelers and commuters something that can help offset those gas prices that we're seeing right now. It also falls in line with Germany's long-term goals of pushing more travelers, more commuters towards rail, towards public transport, which of course brings a lower carbon footprint to public transportation across Germany. But then it also matches better with the efficiency of, or makes those systems, I should say, more efficient, those public transport systems, because they are expensive. They are rather extensive across Germany. Now, the federal government says that it's going to offset the costs from the difference in cost. It's going to offset those costs to the various providers so that they will receive the money that they're going to be losing otherwise.
Yeah, so obviously it's not sitting down well with everybody, as is expected. So what's the controversy?
Well, the controversy is that this could be such a great offer that so many people take it up, and that the costs that come out of this essentially will be greater than the difference in ticket costs. That means if they see floods of people flocking to buses, trains, regional trains, then they're going to have to provide more of those vehicles to meet the demand, and that means more drivers are going to have to drive. That means that there could be delays, there could be overcrowded trains, buses, whatever, and that's going to entail even more resources to be spent. expense. So the cost of just covering that ticket aren't going to be enough. And so that's why you're hearing some of the complaining. There's also some of the logistics of it because there are so many different regional and local and city-based public transport systems. They all have to work a bit more closely on this because they're all using the same ticket system and also just providing it to people, providing a similar platform. It's sort of the typical kind of complaining that you would expect from a system that's very well built out and very finely tuned to try and sort of be disrupted and offer something different. But I think the public appeal here is pretty great, and I think you're going to see this be very popular, in fact.
All right, Stephen, we'll certainly follow up and see how exactly it works out and how the fares come. But let's go to the markets now and give us a wrap-up of the market for the week.
Well, I think that we can expect them to recover from what we saw yesterday, to rebound at least. And of course, inflation was the big worry yesterday, which led markets down. Today, we're already seeing gains from Paris, Frankfurt, and London. London and Frankfurt both up around 1%. Paris, about 0.5% to begin the sessions. And there's also some good news coming out of China. Asian markets were buoyed when they heard that benchmark rates there were raised, or were lowered, I should say, more than expected, lending rates. And that's to offset some of the economic slowdown there. Now, of course, there are some more structural issues when we look at inflation, when we look at the Chinese economic slowdown. They're going to continue to press against that optimistic sentiment. So it's going to be interesting to see what happens here to wrap up this week.
All right, Stephen, thank you so much. We'll do it again next week. Enjoy your weekend. From there, we'll go to London now, and it seems there's an update on that Northern Ireland post-Brexit agreement. I know Juliana has been talking a lot about this. You even discussed it with Ladi, I think, this morning or so. Hi, Juliana. Good afternoon. So we now hear that the European Union is preparing options to respond, to this post-Brexit arrangement. Any ideas what the proposal or the plan is?
Good afternoon, Innie. Well, no ideas just yet, but the EU haven't changed their stance on the fact that there will be monumental retaliation if, indeed, the UK government decide to rip up parts of the Brexit agreement to appease unionists in the Northern Ireland region who are not happy with the fact that they appear to be completely out of the United Kingdom and more aligned with the EU. I think the biggest impact has obviously happened overnight, where we had that statement released by the Speaker with the House in America, Nancy Pelosi, basically saying if indeed the Foreign Secretary Liz Truss does go ahead with some of the arrangements that she announced in Parliament earlier this week, then there would be no free trade deal between the UK and America. And of course, that's been spoken about for years, first pegged by the former President Donald Trump. And it does show that even though Brexit does appear to be very much a spat between Brussels and Whitehall, that the international community are really looking at this. And this is going to be a very difficult road and journey for Prime Minister Boris Johnson over the next couple of months. Potentially, we could be seeing the breakup of the United Kingdom. There is just a small amount of unionists within the DUP, within the Northern Ireland region, who are not happy with the current agreement. The current agreement sees Northern Ireland, which is a legitimate member of the United Kingdom, still aligned with the EU and its rules because of not wanting to fracture the Good Friday Agreement, which would involve putting a border on the island of Ireland. And Boris Johnson feels as if, the protocol just doesn't work, although he is the one who wrote the protocol. And he is the one who signed it into law. So Liz Truss, the Foreign Secretary, did announce earlier this week that there will be changes. Changes will be made. So they are all in a sticky situation. Again, the EU have doubled down on the sentiment that they've had for years, which is you just cannot do this. And if you do this, then, of course, it means that the relationship between the European Union and the United Kingdom is going to become particularly tense, especially at a time where it was less tense because they all kind of banded together since Russia invaded Ukraine. But it is going to be difficult, and expect more scandalous headlines over the next couple of weeks, Innie.
Well, while that is not going so well, now the International Trade Secretary has today launched negotiations, a new free trade agreement with Mexico. I mean, we're not done with that. What's this about?
Yeah, well, this is all about Britain, again, trying to forge new relationships now that it's no longer a member of the European Union. And Anne-Marie Trevelyan, which is the UK Trade Secretary, she has her Mexican counterpart in Whitehall today, and they are going to discuss a new trade agreement. Mexico, behind Brazil, is the second largest Latin American economy. And even though it's so large, because of the distance, at the moment, it only accounts for about 0.3% of all UK trade volume, which I believe is about £4 billion. The current trade agreement they have is about 2 decades old and focuses predominantly on goods. I think whiskey is one of those popular ones, and other items. I think tequila too is another popular item that Brits do love to get from Mexico. But of course, we know that Britain is a service-based economy, and so I think this new free trade deal is going to incorporate some financial services and other things. And I think Britain do see that if they are able to secure this free trade deal with Mexico, then of course it opens them up to the much larger Latin American market. And of course, at a time where the world order is changing, Britain is really keen to forge new allies and better trade relationships.
Yeah, especially in the face of post-Brexit and all that. Well, how are the markets intraday?
Pretty good. It seems as if strong trading is what we're going to be leading into the weekend with, especially because there had been some awful losses earlier in the week. FTSE All-Share is up by 1.87%. The FTSE 100 up by 1.89%. In the domestic market, the FTSE 250, that's up by 1.67%. In the currencies market, the British pound is currently trading up against the US dollar by 0.05%, up on the euro by 0.06%, and up on the Japanese yen and intraday by 0.18%, Innie.
All right, Juliana, thank you so much. Enjoy your weekend.
You too. Thanks, Innie.
Let's move to Asia now, where markets rose on Friday with Hong Kong stocks leading gains as a volatile trading week comes to a close. The Hang Seng Index closed up 2.96% at 20,717.24, while the Hang Seng Tech Index spiked 4.74% to end the session at 4,284.42. Chinese stocks listed in Hong Kong closed higher, with XPeng up 6.99% and Baidu rising 5.19%. Mainland Chinese stocks climbed on Friday. The Shanghai Composite closed 1.6% higher at 3,146.57, while the Shenzhen Component gained almost 2%. We'll go to the United States now, where stock futures bounced on early Friday trading, cutting into losses from earlier in the week that have sent the S&P 500 to the cusp of a bear market, and the Dow Jones Industrial Average on pace for its 8th negative week in a row. Futures tied to the Dow bounced 0.79%. S&P futures traded about 0.96% higher, while Nasdaq 100 futures gained 1.30% higher. We'll have Maria Baird, our correspondent in Washington, now to give us details of yesterday's trading.
The U.S. stock market had a volatile day on Thursday. As it closed lower, the S&P 500 continued its decline, closing at 0.58% down. The heavy tech Nasdaq closed at 0.25% down, and the Dow Jones closed at 0.75% down. It is clear that many investors are concerned about potential recession. Major sell-offs on Thursday. We will continue to watch to see what the coming days brings and how the week closes. But many investors are concerned that even the Federal Reserve will not be able to stabilize the economy.
Well, from the United States, we come to Nigeria, where the Bank of Industry has disclosed that it disbursed a total of 213.63 billion naira to 30,406 enterprises in the country last year. The chairman of the bank, Mr. Aliu Abdulrahman Diko, said that there are plans to even expand the beneficiaries from the Bank of Industry.
We were just coming out of COVID-19 in 2021. In 2020, businesses suffered really. We had to give a lot of concession to our customers in 2020. Even though this continued in 2021, but because of the increase in businesses in 2021, when you compare to 2020, we were able to make profits in 2021, much more than what we made in 2020. In 2020, we made about 35 billion, while in 2021, we made 52 billion, a huge increase. In spite of all the concessions we have been given to our clients, we are still able to manage costs very well and record that profit.
And with that, we'll go on a short break. When we come back, we have more stories from the African continent. This is Business Incorporated on Channels Television. Yeah, welcome back. You're still watching Business Incorporated on Channels Television. Well, with the invasion of Russia into Ukraine and the cut in supply of commodities globally, there's been higher threat to food security. And following this, we've seen donation and promises of assistance from the International Monetary Fund, from the World Bank, from the United States. We have Matt Kindiga now, a practice lead with Sub-Saharan Africa Front of View now, to talk to us about some of these donations and assistance and how it should be focused for optimum impact. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the show today.
Good to have you, Matt, as usual. Well, why are these pledges important at this time? Africa is certainly receiving a lot of attention at this time.
Yeah, certainly. So these pledges are very important at the moment. There's been a lot written and a lot said about the potential adverse impacts of the Ukraine conflict on global wheat and food supplies in general. It's worth remembering that it's not just wheat that is affected as a result of the Ukraine conflict, but also secondary products like fertilizers, which will affect agriculture productivity globally, but also things like cooking oil. Also very large volumes are produced by Ukraine. So this will have an impact on global food supplies overall. In terms of the impact on Africa, why it's so important, it's because many African economies are particularly vulnerable to the effects of the disruption to global food supplies. We see food accounting for a much larger proportion of total household spending in Africa on average. So a rise in food prices or a shortage of particular food products has a disproportionately severe impact on consumers in Africa. We also see certain African economies being incredibly dependent and vulnerable, or you could say exposed, to the direct effects of the Ukraine conflict. And this is because many countries in Africa, including in North Africa, but also a couple of countries in West Africa, are very dependent on Ukraine and Russia in particular for imports of wheat. But also another reason is that African governments at the moment are really struggling with very weak public finances. So they lack the physical capacity to insulate their populations from the effects of food shortages and rising food prices globally. So they have very limited capacity to actually respond to what's going on in the global food industry.
Yeah, we do know that, I mean, when you talk about wheat, countries like Egypt have really felt it. And Nigeria, in fact, is one of those that has felt the impact of wheat. But which of the countries are most vulnerable to these food shortages?
So pretty much every country in Africa will feel the effects, at least, of global food shortages and higher food price inflation. Almost every country imports food. But there are several countries, by our assessment, that are the most vulnerable. So those include countries like Senegal, Ethiopia, Zambia, Mozambique, but also countries in the Horn of Africa. And this is because these are the countries that are already facing high inflation. So in many cases, they've got double-digit inflation. They are very large importers of food from Ukraine and Russia in particular. But they also import large proportions of their total food need anyway. So these are countries that tend not to be able to produce their total food requirement domestically. We're also seeing in the Horn of Africa, so Ethiopia, Somalia, and Kenya, a very severe drought. So the effects of the global food shortage is being really exacerbated in those regions. And in terms of what the impact will be of, what does being vulnerable look like to global food shortages and the Ukraine conflict? So it really is increased risk of hunger, across broad sections of society, but also resulting unrest, so social unrest and political volatility. Those are the two things we're quite concerned about.
Yeah, just as you mentioned, countries all over the world, including these countries you have mentioned, are dealing with inflation. So one would wonder sometimes when the government tries to assist, we see them stoking inflation. So what impact will these pledges have on the already surging inflation in Africa?
So at the moment, the impact of inflation will be fairly limited. And this is because even with these pledges of food aid and assistance, there's still likely to be a severe shortfall in global fertilizer, wheat, cooking oil supplies for the rest of the year and maybe into 2023. So in effect, supplies will continue to fail to match demand. So global food prices will remain very high. And in our view, we are yet to see the full extent of the impact of the war on Ukraine on food prices. We're probably going to see a spike in global food prices in Q3 or Q4 this year. So in terms of the overall impact on inflation, it will be quite limited. We're also seeing very significant increases in inflation in fuel transport costs, so that will also fuel inflation. But these assistance packages, again, are quite important in the sense that they will prevent severe hunger from emerging in certain sections of society. So what we are likely to see, although food prices will continue to rise in Africa, we're going to see the most vulnerable in society, so the poorest households, those living closer to the poverty line, are less likely to face severe hunger over the coming months. So certainly there will be some benefits as a result of these packages.
All right, Martha Kindiga, thank you so much. We really do hope that the benefits spread to those who really need it, and then it's not mismanaged at the top. Thank you so much for sharing your views with us. Martha Kindiga is Practice Lead, Sub-Saharan Africa Front of View. Enjoy your weekend.
Thanks, you too.
Moving to other stories on the continent now, South Africa Reserve Bank has increased its repo rate by 50 basis points to 4.75%, with effect from today, the 20th of May 2022. And there's been consensus within the Monetary Policy Committee to raise the rate by 50 basis points. Explaining the rationale behind the decision, well, the central bank governor said that the rand has since depreciated strongly from April, and that's because of the start of policy normalization in major economies and slowdown in China's economy. Still in South Africa now, we see that a group of world's richest nations have offered South Africa debt guarantees as part of a proposed $8.5 billion deal designed to cut the nation's reliance on coal for power generation, potentially resolving one sticking point in the negotiations. The guarantees will enable South Africa or companies such as the state power utility Eskom Holdings to borrow money needed to close down coal-fired power plants and enable the generation of renewable energy. Currently, coal is by far the major energy source for South Africa, comprising 80% of the country's energy mix. We move to Egypt now, where the country has announced its biggest interest rate hike in nearly half a decade in an attempt to tackle soaring inflation and restore the allure of its local debts with foreign investors. The central bank increased the deposits and lending rates by 200 basis points, each to 11.25 and 12.25% respectively. At the beginning of the week, the government had announced measures to deal with global economic crisis, including strengthening the role of private sector, localizing strategic industries, activating the Egyptian Stock Exchange, and providing commodities. And Cameroon's government has signed a 420 billion francs high-grade iron ore mining deal. That's about $675 million with a subsidiary of Sino Steel Corporation Limited, as China seeks new sources of steel-making ingredients. Sino Steel CAM, the Cameroonian subsidiary of the state-owned Chinese miner, will develop the Lobe iron ore mine in the Central African nation, helping China to diversify its sources of iron ore beyond Australia, with which it is in trade war, and Brazil. Under an initial 20-year mining convention concluded on the 6th of May, Sinosteel aims to mine 10 million tons of iron ore with 33% iron content annually. That's Business Incorporated for today and the week. Thank you so much for being a part of this journey. We'll do it again next week. I'm Ini John Mekwa. Enjoy your weekend.